Well, that's a little better, isn't it? Thank you. Yeah, just so you know too, I moved some of my equipment around because I was doing a live mix of Dead Mouse's for lack of a better name album, which you can find on YouTube. But I was like, crap, I borrowed some equipment for my setup, and so I was looking to forgive me. So hopefully you can hear that all right. And happy hump day to everybody. It is indeed hump day. And I hope everyone in the States did have a good fourth. Hope everyone still has their fingers intact and didn't have any uh, thing explode except for some fireworks and maybe the toilet after you drained 4 hot dogs. Who knows? Um, take a look at the markets. So Bitcoin rocking little retrace right now, which is nice. I actually like the retraces. 2.2%, 2.7% on Ethereum. We have come across the board. It looks like the 2.6 or so has been ideal. Little pullback on Litecoin at 4.2% this morning. Look, whenever we see retraces and when something's bullish, personally, I'm looking for opportunities to kind of increase my position. So, what does Warren Buffett say? Buy the dip, right? Non-financial advice. Solana 3.1%, and Polygon negative 3.9%. So it looks like the whole space on large cap coins retraced. That's cool. It's fine because we frankly rallied quite a bit, and I think it's probably healthy for us to have a bit of a retracement instead of always going up. But let's take a look over at the actual charting, and I'll show you some of the things I'm looking at. There you go, right there. Okay, bud. So this is Dogecoin. I was telling you, Dogecoin is in. I don't have space. Let me. There you go. So Dogecoin, do we zoom? Do we do that right now? Yeah, cool. Trading View, you're being a pal right now. So if you zoom out from hours maybe to like day view, that gives you a much better view of what we're talking about with Dogecoin. We have this big freaking wedge and even this smaller wedge, and we're inside of it, and we're underneath that line. So frankly, I think anytime there's a big breakout coming up soon, Doge is going to rip out. And if you look at date ranges, we are kind of due. If you were to use the date range tool and you were to check out, from the bottom of where we were confirmed bullish to where we were at the top, that's 25 days. Like, that's just how quickly Doge moves. But from that bottom to the next bottom before we rallied again, 98 days. And then if you were to flip that over and take a look, like from that bottom to this top, it's 28 days. So Doge tends to move pretty quickly. Like, we're talking 30-day cycles. Now, if you were looking at when we like bottom to bottom, right? So from this bottom till we hit up until we're totally done with this rally, which was pretty much here. That's like 237 days. And so you look over here, like we kind of had another 237 days again. I think that's pretty much what this was here. So that being said, things they don't always they don't always rhyme or repeat themselves, but they do always rhyme. So we're running into that time frame again. There's probably, we're well due is the point for Doge to do something interesting, but we had a very deep bear market, and that's the reason there hasn't been much of a run up, and that's okay. That being said, we're underneath the accumulation line. We're definitely in an accumulation zone, so I'd say get into a position while you have an opportunity isn't always a bad idea. And frankly, this is this is the low Doge presented after Elon entered the picture. So I'd say just pay attention. We're at the bottom there. And then looking at Bitcoin here, and actually let me flip this view over to something like this for you because I love you. There we go. Looking at Bitcoin, we had this descending wedge, we broke out of it, and now we're in this channel. And so I expected to just kind of ping pong around in here because we don't have any confirmation. We're going to move sideways between 31 and 30K. It's just ping, 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 going to go up and down. The question is it always going to touch? No, it's not always going to touch. Can it break through? Yes, it can break through. But on these short time frames, it doesn't matter that much. What really matters on Bitcoin is monthly, because people are looking at monthly to make their big macro buying decisions. So looking at monthly here, you can see July has already started out as a red candle. And so that's the question. Is this going to be a green candle or a red candle? Because we had green, 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 red, green. And so right now we're kind of building a spinning top. If we end up building a spinning top, that means no confirmation for the month of July. It'll weasel its way into August. And frankly, that's kind of what I see happening. I see a spinning top on Bitcoin waiting for the halving of Litecoin to be over. And then we'll probably have an indecision for this month. But for the next month, I really do think we'll have a breakout and we'll have another green candle. So, uh, you know, I'm not here calling the shots, but it's sure looking like that so far. That being said, it's only the 5th of July. So we have another 3 weeks for this to flesh out. Let's just pay attention to that monthly candle on Bitcoin, though, because that's really going to tell us where most of the space is going in general. And then let's take a look at Litecoin, because I know everyone's paying attention to Litecoin. So we did have a big breakout. These are the monthly candle view. It's retracing. So that's the big question here is, will this spinning top here end up resolving up? I think it will. And if we look into day view, you can see that's only 3 days we've retraced. And, we are retracing down testing 97. So I don't know that we'll go all the way down to 97, but it's probably going to bounce directly off of 97. If it does, it'll be a flash wick. And looking at the hourly on that, you can see we're now in my accumulation zone again too. So, accumulate right here. This kind of set the precedent for really where I'm paying attention. So right at 102, we're pretty much just under that right now. So we have an opportunity to scoop if it's going to pull back up into this channel. And history would say it will, but that's not to say that you should necessarily play that if you have less of a risk tolerance. So just pay attention. We don't have deep confirmation, but it is retracing. And usually prior to a halving, that little up we had isn't the only up we'll tend to see. If we look at the long position from bottom to this top here, that was a 35% move altogether. So I don't think that's all Litecoin's got for us. I think we got some more fireworks under the hood. So just pay attention, and I'd say get into a good position on the retrace here. And anything else we wanted to cover? I suppose do take a look at Grayscale Bitcoin, because that one, if you have 401k, Roth IRAs kind of thing, you can throw your money into Grayscale on that. And yes, you do not have your keys there, but you also don't have to take capital gains to just reallocate your distributions. So you don't have to pay taxes on pulling that out. So, and you can still play some of the crypto price action. So if you look at from this bottom up, we're seeing 61% in a really short time frame. So, I'm sorry, 59%. My apologies. Although if we go down here, could it be? Could it be? Yeah, 61%. So technically, this is a pretty good idea. It looks like the Grayscale Bitcoin specifically is having a nice time today. So just pay attention when that retraces. Maybe it's a good time to get into that. We're at the support level right here at $20 per share. So, you know, interesting times. So let's get into our stories for the day, shall we? And I know my camera's all wiggy. We're just going to roll with it. We do the show live. You got to know. You got to know. You got to know. There we go. There you go. Are we talking about buying Grayscale or buying BTC through Grayscale? I don't think Grayscale lets you hold private keys, do they? Do you know that, Indo? Um, I'm legit gonna get allergy shots because this is getting ridiculous. It's getting ridiculous. I don't like having to constantly sneeze, and my eyes are itchy, and I don't feel great. We're okay. We're okay, bud. So, first story for the day. Binance to suspend transfers of several tokens tied to Multichain following incident. So let's take a look at this here. Crypto exchange Binance is suspending support for deposits and withdrawals of several cross-chain bridge tokens tied to Multichain project. The suspension set to start on July 7th will remain in place on Binance.com, which is not available to people in the United States until further notice, as stated in an announcement. The suspension includes an array of tokens minted on Multichain across different networks. It particularly impacts tokens deployed on BNB Smart Chain, including tokens such as Polkastarter, that's silly, Pulse, Alchemy Pay, ACH, that's funny, and Beefy.finance, also funny, BiFi, and Harvest Finance, also known as Farm. These are really funny names. This sounds like stuff out of a video game. Very good. Tokens minted through the bridge on Phantom, including Beefy.finance or BiFi and Alpaca Finance, are also part of the affected list. Travala AVA, a token minted on Ethereum's bridge, was also included. Binance has not specified the reason for suspending assets tied to the multi-chain bridge. The exchange merely noted that this is a follow-up to a previous action taken against multi-chain on May 24th. At that time, Binance temporarily suspended support for deposits of some tokens transferred via multi-chain, citing complications with the multi-chain protocol. Despite the ongoing suspension related to the multi-chain project, Binance maintains that its users can continue to deposit and withdraw the impacted tokens through other networks supported by the exchange. This means those assets can proceed uninterrupted, providing they do not involve the multi-chain project. The multi-chain bridge currently oversees over $1.3 billion in assets minted through its cross-chain platform. This includes 698 million minted on Ethereum, 339 million on BNB Smart Chain, and 92 million on Phantom per DeFi Llama data. Multichain's technical issues in May. In May, the Multichain project experienced difficulties with processing bridge transfers, resulting in numerous stuck transactions. Several pathways of Multichain's cross-chain bridge, including Kava, ZK Sync, and Polygon ZK EVM, were not operational during the crisis. Initially, the Multichain team ascribed the problem to technical hiccups. However, later they clarified that while most bridge routes were functioning as expected, a few remain non-operational due to reasons categorized under the broader term force majeure. I don't know what that means. I'm going to look that up. What's majeure? Force majeure means superior force. It is a French term that means superior force that's often used in business circles to describe uncontrollable events that make it difficult or impossible to carry out normal business. Well, now you know. It was categorized as a force majeure. The project later admitted that it could contact Multichain CEO CZ. Oh wait, CEO. That's not CZ. CEO Zhaojun. Yeah, Zhaojun. Seemingly confirming rumors that he was detained by Chinese police and had partial control over the project's upgrade function. As of now, the platform bridges route appears to have returned to normal functioning state. Ouch. Yeah, that's unfortunate to hear that. And just so everyone adds to their vocabulary today in the chat. I love you. So interesting. So it appears like under the hood, it looks like someone just got in trouble with the local authorities and had access to upgrade functions. And so rather than air out dirty laundry, he's just taking precautions. That's smart. Anyways, majority of Canadian willing to use CBDCs believe their privacy will be guarded. So it looks like the Canadians trust the government. So that's good to know. The majority of Canadians trust the government and are willing to use CBDCs because they think the government's going to protect their privacy. That's nice to hear. When else have we seen in human history where the government protected people's privacy? When did that happen? I forgot that chapter. Do you guys remember that chapter where the government protected people's privacy? It's not in my book. I missed that part. The majority of citizens in the second largest North American economy are willing to put their trust in a central bank digital currency. According to a survey performed by Wealth Rocket, nearly 60% of surveyed Canadians say they are open to the idea of a CBDC and enjoy the taste of boots on ice cream. 59% of Canadians are willing to varying degrees to use a central bank digital currency if one ever becomes available, and 25% would use it in place of cash. 56% of Canadians are concerned about the potential for fraud with a CBDC, as well as the risk of cyber attacks, potential misuse of personal data, and lack of anonymity with transactions. So hold up. So 56% of Canadians are concerned about the potential for fraud. That's what they're worried about, fraud. They think, and the hackers might be the problem. Although 44% believe personal data might be misused and with a lack of anonymity. So it seems like some of them mistrust, but it's not. I'm not sure how to read this data. It's saying 59 are willing to do it, but they think there's problems with it. Is that what I'm? All right. 51% of Canadians are somewhat confident in the Bank of Canada to safeguard their privacy if a CBDC is implemented, while 25% are not confident at all and should move to America. Well, we got room for you guys. The Bank of Canada has stated that they do not have any current plans to introduce a CBDC, but are making necessary preparations in case its parliament requests it in the future. The Bank of Canada conducted the public consultation of CBDCs from April to June. Canadians were asked about their payment habits, how they would utilize a CBDC, and their level of trust in the government and institutions to safeguard their data. The central bank tends to use the feedback gathered during the consultation to guide the ongoing developments of CBDCs. At least 130 countries, including Canada, are currently exploring CBDCs. Of the 20 G20 countries, 19 have CBDC programs in early development, according to a recent report. Yeah. Look, I don't know how many science fiction novels you have to read, but you don't hand faceless people guns and say, "Don't shoot me." You don't do that. You don't hand faceless people in the government the right to turn your ability to feed your kids on and off. That's not the right thing to do. And unfortunately, CBDCs promise ease of use, but you know, low key golden shackles. So let's not do that. Don't do mine like that. Right. Cryptocurrencies are back in fashion as the total crypto market cap keeps rising. So let's take a look here. The first half of the trading year is behind us, and one of the most notable developments is the increase in total crypto market capitalization. Following 2022, when many crypto investors got fed up with the industry scandals and left, the 2023 rally looks like the start of a new bullish market. The performance is even more impressive given that the US dollar is trading with a mixed tone against its fiat rivals. Investors' renewed interest in cryptocurrencies led to the total market capitalization growing by more than 50% in the year's first half alone. So, yeah, apparently in the last 6 months, the whole crypto market has grown more than 50%. Only in the last year, the market grew by more than 3%. And wow, so in the last week, it grew by 3%. And investors are optimistic because Bitcoin, the leading cryptocurrency, holds near the yearly high. Interesting. Bitcoin is the main reason why investors are optimistic about the cryptocurrency industry despite the ongoing scandals, frauds, and lawsuits. In the end, all that matters is market watch or for market watchers is the Bitcoin's price holds close to that yearly high, despite rallying in 2023 to over plus 85%. Therefore, the path of least resistance in the year's second half seems to be the upside. So, what this is saying is that they really do think Bitcoin is going to be going up over the course of this next year. What's up, Gandhi? I see you, brother. Yo, 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 yo. And good morning, Crypto Nation. Happy 5th of July, where, the fireworks don't stop if you ate 5 hot dogs. I know. Let's see. Not all currencies perform like Bitcoin, though. For instance, Dogecoin is flat on the year, up by about plus 0.3% in the first 6 months of 2023. This is a huge divergence from what Bitcoin and other cryptocurrencies did, Ethereum, Litecoin, Ripple, and it reflects the crypto investor concentration in a few cryptocurrencies. Yeah. Moving forward in the year's second half, crypto investors might want to watch developments in the traditional currency market. And really you might. That's why I started talking about Grayscale Bitcoin, because Grayscale Bitcoin and also WTI crude. Like that moves like a crypto, by the way. More precisely, what will the Fed do with the funds rates? If the US dollar loses ground against its rival fiat currencies in the next 6 months, Bitcoin and other leading cryptocurrencies are well positioned to rally some more. As the Fed pauses the rate hikes in June, one should embrace the possibility of current funds rates being terminal to one for this tightening cycle. So this is good news, right? Bitcoin is proving itself to be very robust, and I think let me show you something. I will show you something. Go, come on now, come on. Why are you treating me wrong? There you go. So if you were to also look at if you were to all dang it, it's not in here. All right, it's fine. I'll look it up. WTI crude also moves like a cryptocurrency, and you got to see this. Like, if you do have some money in normal stock markets, like check this out. Doesn't that look like a freaking altcoin? This is hourly, dude. Like bottom the top on hourly, that's 8%. Right. It moved in this short time frame. It moved 8%, and it does this all the time. Like I tripped out when I saw this. I was like, "Hold up, what?" And mind you, um, gas and oil equals energy, and energy equals Bitcoin mining too. So, like, doesn't this look like a cryptocurrency? And if you were to look at the day on this, like, dude, this thing moves like crypto. So just all I'm saying is, if you have money in your 401ks or Roth IRAs, like do take a look at WTI crude and do take a look at Grayscale Bitcoin, because I think even if crypto doesn't have a ton of movement at the moment, um, you can hedge your bets over there too, and end up making some money that later you could throw into crypto. So just don't sleep on it, because there's opportunities here, right? And this is directly tied with Bitcoin mining, being that it's energy. So you were to look at that, like how short is that time frame to go 10%, right? That's 1, 2, 3, 4 days. So yeah, I don't know. Just don't sleep on other opportunities, because we got some. And then if you can make money there, and then whenever Bitcoin has pullbacks, throw it over into Grayscale Bitcoin and play that up. You could take capital gains taxes, but throw it into actual crypto, and then you're in self custody. So I don't know. Seems like a pretty smart thing to do. But let's get back into our stories, shall we? Just fun. I'm just gonna do it the easy way. I don't hunt for tabs on the little screen. Oh, I picked the right one. I win. So share this tab instead. Share this tab instead. There we go. Controversial proposal to appoint CZ as Luna Classic leader sparks backlash. Yikes. Why would you do that, bud? So let's read. The Luna Classic community, or LUNC, recently found itself embroiled in a heated debate over a proposal that raised eyebrows and fueled controversy within the crypto community. The proposal, titled "Let's Make CZ Binance's CEO Leader of the Terra Blockchain," also known as Luna Classic, prompted widespread criticism. Cosmos Rex, an active member of the Luna Classic community, posted the contentious proposal on Twitter. He expressed dismay and criticized the idea, stating that making the blockchain appear like a meme undermines its credibility. Cosmos Rex argued that the proposal was embarrassing and appeared to surpass all previous far-fetched suggestions. WTF is this BS? If you want to be taken serious, don't make the blockchain look like a meme. This is embarrassing. If there was a copium proposal, then this would take the cake so far. Yeah, that looks like it. The analyst further highlighted a knowledge gap in governance within the community, noting that voting someone into leadership roles without their consent, that's funny, contradicts the principles of the centralized and community-owned blockchain. He emphasized the responsibilities of governing such a blockchain, calling for a more informed and thoughtful approach. The proposal faced ridicule not only from the community members, but from the broader crypto community. One Shiba Inu enthusiast claiming personal knowledge of CZ, the Binance CEO, dismissed the proposal, stating that the CEO would not even dignify such nonsense with a response. Another community member proposed a mechanism to prevent absurd proposals in the response to concerns. The person asked whether it would be possible to delete frivolous proposals and impose penalties, such as confiscating a significant portion of the Luna Classic tokens. Cosmos Rex responded by suggesting that non legitimate proposals should be vetoed, resulting in the proposal losing their deposits unless the proposal could be genuinely controlled through governance. Ultimately, the controversial proposal prompted a deep reflection within the Luna Classic community, underscoring the need for responsible decision making within the ecosystem. So, one question I have here is, after the first Luna issue, I don't know why someone would flippantly support Luna Classic again. Like, it it seems like we already learned our lesson here. We going, how many times do we have to teach you this lesson, old man? If it feels like that, right? Like, why are we putting ourselves in that position another time? Cheerio. Apologies for that. But when allergies kick your butt, you do what you got to do. So, Google updates its privacy policy to allow data scraping for AI training. I don't. How do you feel about that? That sentence right there, that headline. Yeah. No. I even took my allergy pill last night. What is this crap? The latest updates to Google's privacy policy reveal that Google may use any information available to train its various AI products and services. And yeah, history likes to repeat itself. At least it likes to rhyme. So we should write lo-fi beats for history. That way it can rhyme over our beats. So let's take a look here. Google has made updates to privacy policy that now allow it to take any publicly available data and use it for artificial intelligence training purposes. Okay. The update to the company's privacy policy came on July 1st and can be compared to previous versions of the policy via a link published on the site's update page. In the latest version, changes can be seen that include the addition of Google's AI models, Bard, and cloud AI capabilities to the service or to the services. It may train by using information that's publicly available online or from other public sources. So, for example, we may collect information that's publicly available online or from other public sources to help train Google's AI models and build products and features like Google Translate, Bard, and cloud AI capabilities. Or if your business's information appears on a web page, we may index and display it on Google services. Okay. The policy update infers that Google is now making it clear to the public and its users that anything that is publicly uploaded online could be used in its training processes with the current and future AI systems it develops. This update from Google comes shortly after OpenAI, the developer of the popular AI chatbot ChatGPT, was charged with a class action lawsuit in California over allegedly scraping private information from users via the internet. The suit claims that OpenAI used data from millions of comments on social media, blogs, Wikipedia, and other personal information from users to train ChatGPT without first getting consent to do so. The lawsuit concludes that this, therefore, violated the copyrights and privacy rights of millions of users on the internet. Twitter's recent charge in the number of tweets users are able to access depending on their account verification status has caused rumors across the internet that it was imposed partially due to AI data scraping. The documents of Twitter's developers read that rate limits were imposed as a method to manage the volume of requests made to Twitter's application programming interface. Elon Musk, the owner of former CEO of Twitter, recently tweeted about the platform getting data pillaged so much that it was degrading service for normal users. So basically, Elon's saying that people were using the API in order to try to scrape everything they could off of Twitter for AI training, it seems. So, I mean, how do you guys feel about this? Like AI scraping your information that's just on Facebook and on your web pages and whatnot? Like, does that feel good to you? Does it feel dirty? Does it feel like it's going to get misused? My questions come up here is like, what if somebody hacks some account that you had, I don't know, maybe some weird forum you had, and this was back before people were smart about passwords, and they leaked your password gummy bears for you or something, I don't know, and you're using that same password for a bunch of other sites as well. What if AI learns that and then is used to systematically try to sign in and hack people's accounts and see what sort of data they can pull to lock you out of those accounts, and then I don't know, use your likeness? Like those are the types of nefarious things that could happen with something like this, because this isn't just at the power of a person. This is at the power and speed of it AI. So I don't know, man. I think we're living in the cyber wild west here, and it's about to get pretty wild. So wild, I think people don't even understand what they're in for. So ready or not, here it comes. Just change your passwords. Go change your passwords, friends. Four U.S. banking giants now have 205. What is that? This is million billion. Okay, $205 billion in unrealized losses. Oh my goodness, sitting on balance sheets. So apparently, banks are 205 billion in the hole. The four largest banks in the U.S. now have a total of 205 billion in unrealized losses on their balance sheets, according to a new report. They should get into crypto if they're used to these kinds of swings, man. Bank of America, Wells Fargo, JP Morgan Chase, and Citigroup have compiled the losses due to bad bets in the bond market. Reports the Financial Times, citing fresh data from the Federal Deposit Insurance Corporation, or FDIC. They got to come up with a new acronym. That's not a winner. It's not a winner, bud. Bank of America is in the worst shape by a significant margin, with 100 billion in unrealized losses on the books at the end of the first quarter. Oof. Wells Fargo and JP Morgan Chase both have $40 billion in unrealized bond market losses, while Citigroup has $25 billion in paper losses. Silicon Valley Bank is now the poster child representing the potential pitfalls of unrealized losses in the banking system. The bank's rapid failure back in March was sparked by an announcement that the bank had booked a $1.8 billion loss from selling a portion of its bond portfolio. Bank of America has said its own bond portfolio is not for sale, a move which could hinder the amount of money the bank can generate from deposits. Bank of America, or BOFA, that's a terrible acronym too, has said it has no plans to sell the underwater bonds, avoiding crystallized losses that for now exist only on paper. The bank's portfolio consists of highly rated government backed securities that are likely to eventually be paid back when the underlying loans mature, or as some say, mature. There's no CH though. You see that? It's no CH. MATURE, mature. Despite the paper losses, the Federal Reserve says Bank of America and its peers fared well in a recent stress test on the banking system. The test, which simulated a severely adverse condition in the U.S. economy, found America's top 23 banks would remain above their minimal capital requirements in a hypothetical recession, despite total projected losses of $541 billion. So, looks like even banks are feeling the bear market. But then again, you shut the economy for 2 years because of a disease, and the fear response to it. Yeah, you might have some financial ramifications from that. I'm just saying. Binance spot trading volume dropped by 70% in Q2 2023. So people aren't DCAing, is what this means. Or at least not on Binance. Let's take a look. So the last 3 months have brought much pain to a cryptocurrency segment, seriously damaged by regulatory scrutiny and the bank's fear collapse in the US. However, the June 2023 micro rally gives bulls some hope, new Kaiko research says. Binance BNB spot trading volume plummeted to 2020 levels. Coinbase, Kraken, OKX are also affected. So look, you got to tell your friends to start DCAing because you know this. When crypto's hot and popping, everyone's like, "Oh, yo, what's up, Gundy? I know you do that crypto thing. Can you tell me who should I buy some Bitcoin? Should I buy some Dogecoin? Should I buy some PP coin? Like, let me know what I should do." Like, everyone's got those friends, right? They come creeping out from under a rock every time crypto's hot and popping. They're not in it for the long run. They're in it for, everyone else is doing it. So there's no shame. There's no shame at all to that demographic of people. Instead, I think it's our responsibility to just care for our friends and family who are like that, and to be like, dude, let me come over. I'll bring some Chipotle burritos. We can figure this out together. You help them set up their accounts and get right and give them a little cheat sheet. But honestly, if you set up automated purchases like something little like 20 bucks 10 bucks a week, 20 bucks a paycheck, that kind of thing. Like people end up making so much money off of that type of automation because they don't feel it. They don't even know they have that money dripping out into crypto, and then later crypto pops off. They're like, "Don't I have crypto?" And you're like, "Yeah, dude, I set that up." I'm like, "Oh shoot, man, I got like $12,000 in here." I'm like, you sure do. And imagine if you had put even more in. Imagine that. Anyways, take care of you people. That's all I'm saying. Not everyone has their own best interests in mind. Some people, you know, some people play Fortnite. Just remember that. 70% of its aggregated spot trading volume across all pairs vanished. Such calculations were provided by leading crypto research. And so spot trading volume metrics, let's take a look at this. This is spot trading volume. 2021 Q2, people were really up in it. And then people kind of fell off the bandwagon like bad. Spot trading volume metrics plunged to levels unseen since Q4 2020, when Bitcoin only started recovering from its 2018 to 2020 bearish recession. I mean, there was still some bull action in that bear. Besides unprecedented regulator aggression, that's exactly correct. Unprecedented regulator aggression. Binance or BNB underperformance might also be attributed to its decision to reintroduce fees on many Bitcoin trading pairs. Key Binance competitors, OKX, Coinbase, Kraken, lost over 50% of its spot trading volume. Also, trading volume in euro-based pairs dropped to 2-year lows, the report says. At the same time, amid the mania gaining steam about the potential launch of spot Bitcoin ETFs by asset management giants, the trading activity increased on spot Bitcoin ETF products. ProShares Bitcoin Strategy, or BITO, that's a great acronym, fund registered $50 million plus daily trading volumes for the 5th time in its history. Yeah, you're scared of anything pegged to fiat, and what happens if fiat crashes? I don't think every fiat is going to crash at the same time. I think it's more like you might see the US dollar lose prominence, you might see the euro lose prominence, things like that, but it's not going to be widespread. There are governing bodies with enormous vested interest that can literally pull a string and stabilize it. So, if anything, we should kind of be sketched towards like having a ton of money in one specific stablecoin for a long period of time. Because mind you, when you have assets in some crypto asset over a long period of time, your exposure increases because of the length of time it's being held in the asset, right? Yeah, not like this, guys. The USDC is gunning to be that USA stablecoin. It seems like the Chinese Communist Party is involved with a lot of the coins we talk about. I from what I see, there's a lot of government involvement uh, from other foreign agencies, even within the United States. So uh, I think, if anything, that's why Bitcoin is so uniquely different, because Bitcoin isn't the official coin of any no country owns Bitcoin and can regulate it uh, across the board. There's no whales in Bitcoin that can make its value just go away. And so knowing that Bitcoin is a borderless cryptocurrency with the enormous hash rate that it has, I really think that it is the hedge against a lot of these political power dynamics. So, yeah, lots of things in the space are experimenting with the same technology, but I think Bitcoin really is in a league of its own, in my view. Despite airdrop frenzy, layer 2 token was worst performer of Q2. Situation in the altcoin segment also looks sad for cryptocurrency bulls as the SEC is cracking down on major altcoins, including almost all of the top 20. Open interest metrics dropped by 40% in just 5 days in mid-June, while almost all major categories of tokens, Kaiko tracks L1 altcoin, L2 altcoins, DeFi tokens, DEX tokens, BTC and ETH, and so on, closed Q2 in 2023 in the red. Core governance assets of second layer solutions for Ethereum are the worst performers. So all those things that were get rich quick on Ethereum got punched in the Donkey Kong, is what we're hearing. L1 tokens lost 24% of their capitalization in Q2. At the same time, the BTC and ETH portfolio is one of the rare baskets that managed to close both Q1 and Q2 with positive growth. So it looks like main Ethereum and Bitcoin, those both have positive growth. People are dropping out of crypto DCA, and we need to remind our friends to get back in it. And it looks like a lot of these get rich quick tokens on Ethereum are now no hype at all. So our last story for the day, BlackRock has reapplied spot Bitcoin ETF after its arrangement. Let's read. BlackRock, the world's largest asset management company, has reapplied by issuing its Bitcoin spot ETF application after the SEC's warning. Nasdaq has again submitted a bid to launch a spot Bitcoin exchange traded fund in partnership with the world's largest asset manager BlackRock and leading US cryptocurrencies exchange Coinbase. If approved, this ETF would be the first of its kind in the United States, where regulators have so far rejected or delayed dozens of Bitcoin ETF applications, citing concerns about market manipulation, investor protection, and custody issues. The SEC has approved only 2 Bitcoin futures ETFs that track the price of BTC contracts traded on regulated exchanges. The SEC recently reported that ETF filings were insufficient, according to Wall Street Journal sources. The lack of the name of the intermediary cryptocurrency exchange was cited as the reason for the inadequacies of the applications. After the changes made by many companies along with BlackRock, Coinbase was shown as the intermediary for these ETFs. The Bloomberg ETF analyst explained the issue as follows. So just in BlackRock, can't run that together, or else if the R is not emphasized, BlackRock becomes BlackRock, which could sound like you're saying Black Croc or something else. Has refiled for spot Bitcoin ETF. The resubmission was dated 6/29. Nasdaq, clicked it. Nasdaq posted, though. They just added Coinbase like everyone else. So apparently, got it. So although the resubmission is on June 29th, the news was shared by Nasdaq today. So it looks like they literally just slapped. So Jonathan Kane, AVP Principal Associate General Counsel. I don't see the Coinbase piece on here, but apparently that's they said, hey, Coinbase, they cited Coinbase for the reason they should be resubmitted and reconsidered. So pretty interesting. But that's our story for the day, everybody. Thank you so much for joining me, even after the 4th of July. I know everyone was up late last night. Coinbase stock could be a fun ride to get on. Yeah, man. Things are going to be riding like Black Rock, hard as a rock. You know what they say. I will leave us today with look. So I'm going to show you something. This was a performance done last Friday. It came out really nice, but unfortunately my video driver wigged out. Apparently it updated the video driver in the middle of it, and audio recorded nice, but the video got a little weird. So make sure you dollar cost average on Friday. We'll be back on Friday, and until next time, keep calm and huddle on. You know I love you. You know I do. And here is a bit of music for y'all. Oh wait, I got I forgot. I gotta do something. I have to represent it. Don't do music, but, so it is, man. So it is. We're out here, we're grinding. Things are live. Just gotta deal with it sometimes. Anyways, bump it.